Hey everyone, Couch Investor back to another video for today. Now, I would like to say that I am surprised by the results that the trade desk has showed us, but to be honest, I'm not surprised anymore. Jeff and the team have been executing flawlessly in the last couple of years, and especially during this turbulent ad market, I think they've done pretty well. That's maybe also why the stock is up around 8% at the time of making this video. Of course, prices might fluctuate at the time when you're watching. But this quarter, again, showed why the trade desk is trading at a premium. Of course, to me, this is the only issue with the company and the stock right now, is that, well, the stock itself is expensive. But, as I've explained in the past, there is a reason why it is expensive, and that is because it is the best in class. It has a great management team, great product in a very, very big market and a growing one. So, of course, the market seems to be okay with paying such a premium. Now, we're going to go over this earnings report. I'm going to share my thoughts on, well, what's happening this quarter, what could happen in the year ahead. So if you enjoy this type of videos, give it a thumbs up, subscribe if you have not. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top invest stocks to buy now, or go to full.com/couchinvestor. So first things first here, little word from Jeff Green, the founder CEO. So the trade desk outpaced nearly all areas of digital advertising in 2022 with 32% revenue growth year over year, that's for the full year, and a record $491 million of revenue in the fourth quarter alone. This performance was underscored by significant profitability and cash flow. Of course, some people were expecting this to be the first quarter of $500 million in revenue. That did not happen. Now, in an unpredictable macro environment, our growing relationships with agencies and brands is testament to the value of the open internet over the limitations of walled gardens. More of the world's leading advertisers are gravitating to fast-growing channels such as connected TV and retail media. By the way, with regards to connected TV, I believe Roku will report earnings after hours, so stay tuned for that. So fast-growing channels as connected TV and retail media, which offer premium value at scale. They are leveraging new identity tools such as Unified ID 2, which allows them to make the most of their first-party data in a privacy-safe manner. These trends will accelerate in 2023 and will continue to invest in our platform to help advertisers drive maximum value for these opportunities. And I'd like to read this again. These trends will accelerate in 2023. So for those that think that 2023 will just be a year of flat-ish, well, we were wrong. Now, with regards to the actual highlights for, let's say, for this quarter and for the full year. So revenue for this quarter grew 24% year over year, full year 32%, as we've just seen. Net income for this quarter increased quite a lot, so $71 million net income for this quarter compared to just $8 last year. Now for the full year, obviously you will see here a big difference. So 53 million for the full year. Last year that was 138 million. We're going to talk about this a bit later on. Now GAAP diluted earnings per share, they have been GAAP profitable for the last 13 years, by the way. So for this quarter, 14 cents compared to 2 cents last year. For the full year, that's 11 cents compared to 28 cents in 2021. Now when it comes to non-GAAP results, adjusted EBITDA of $245 million, a nice increase from $192 million in 2021, and then for the full year, $668 million compared to $503 million. As for the margin, we can see year over year for this quarter, it has increased from 48% to 50%. For the full year, it remained flat, 42%. And as for non-GAAP net income, we reached $190 million this quarter, which is lower than the $208 million from last quarter, but for the full year we're at $522 million compared to the $456 million. Same story here when it comes to non-GAAP earnings diluted. So 38 cents for this quarter, 42 cents the same quarter last year, but for the full year we're up 13 cents. Now, when it comes to a couple of highlights I'm going to touch on, so continued share gains, 2022 gross spend of nearly $7.8 billion, strong consumer retention, so that remained over 95% during the fourth quarter, as it has for the past 9 consecutive years. Now, with regards to collaborations and Unified ID 2.0, so they say here leading advertisers running campaigns on Disney's UID 2.0 powered audience graph report results 12 times more effective in reaching target audience. Paramount Advertising announced its integration with UID 2 to scale identity on its CTV inventory. And lastly, Draco, location-based marketing and analytics service company, announced its support of UID 2. Expect these announcements to continue throughout the year. Now, when it comes to guidance, so they gave us first quarter guidance here, revenue of at least $363 million. Of course, that's a huge decrease from Q4, but Q4 is usually a strong quarter. And then adjusted EBITDA of approximately $78 million. Now, they did announce something that I did not expect, which is a share repurchase program. So the company announced that the board of directors approved a share repurchase program with authorization to purchase up to $700 million of its Class A common stock. The new share repurchase program is designed to help offset the impact of future share dilution from employee stock issuances. To be honest, I did not expect this. Of course, we all know why, because, well, the current stock price is pretty expensive, but I believe they think that they have enough money to run the business right now, and this is the best way, let's say, to reward shareholders, or maybe to continue to operate the way they have been operating to attract great talent, but also not diluting its current shareholders. So, okay, we'll see when they'll use this amount to buy back shares. Maybe we'll hear it already in the next quarter. Let's wait and see. And now when it comes to the decrease that we've seen at the start of this video when it comes to net income, so stock-based compensation is obviously one of the reasons, if not the main reasons. Well, let me scroll up here for a second. So operating expenses, as you can see, net income for this quarter is up, but for the full year, as we've seen, that's down. That's because you can see here general and administrative. You can see huge increase here year over year, basically for all the other categories as well. Now, if we scroll down, stock-based compensation expense, you can maybe see it a bit better. So this quarter compared to last year's is down. So that's okay. But for the full year, you can see here basically an increase of $160 million. Now they say here this includes stock-based compensation expense related to a long-term CEO performance grant of $66 million and $262 million for the 3 and 12 months ended December 31st, 2022, respectively, and $158 million for the 3 and 12 months ended for the same period in 2021. So basically, this is here the explanation. Of course, we've talked about SBCs a lot. Let's see if 2023 we can decrease that amount. Now, last two things here when it comes to the presentation. So this is basically showing you the potential that the Trade Desk still has. So top 20 worldwide advertising market. 90+% of the Trade Desk spend is in North America. Only approximately 10% is spent internationally. But 33% of all ad dollars are spent in North America, whereas 67% of all ad dollars are spent outside of North America. So there's still here a huge opportunity for the Trade Desk in the years to come. We'll see what their strategies are when it comes to international growth. And then last thing, and that's shopper marketing. We've talked about this with regards to Roku as well. By the way, Roku, DoorDash, they had a couple of announcements last week. We're going to talk about that also in the Roku video. But when it comes to the Trade Desk, why is shopper marketing important? Well, 77% of CPG companies and retailers have a shopper marketing function. 21% of total US digital ad spend in 2020 was on retail, $35 billion spent on digital retail ads in 2021. That's a 26% growth year over year. And 1 in 3 US shoppers use online and offline info to make purchase decisions. Now, if we scroll even further down, you can clearly see already that the Trade Desk is a huge player when it comes to, well, partnering up with those companies. So Albertson, Kroger, Target, Walgreens, they're working with the Trade Desk, partnering up with the Trade Desk. And then if you've been following the news along on this channel, you know that Walmart has its own DSP, but who helped build those DSP? Well, that's the Trade Desk. So to conclude, and this is always my easiest conclusion when talking about the Trade Desk. By the way, for those that don't know, Trade Desk is in my top 5 holdings. Although I don't talk a lot about it on the channel, it is a very high conviction holding for me. So to conclude, another flawless execution by Jeff and the team. Of course, the stock is expensive, but hey, That's just the way the market is right now. Of course, do share your thoughts down in the comments below. Are you adding? Are you just holding? What do you think about this quarter? Let me know down in the comments below. And if you enjoy this type of videos, do leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.